Hi everybody, welcome to Business, Trading and Money. Today's episode or today's video, we're discussing stock HCMC, why it's up, should you buy in, is it too late, can you make money, will it go to the moon? All those questions answered in this video. Let's go. Okay, welcome back to another video, guys. Today's video came up because someone asked me on Twitter, what is this stock? Or I saw it on stock tweets as well. It was like exploding. I saw lots of rocket ships, and I thought, okay, I need to discuss this particular stock. I was in this stock last week for a very short period of time. I think I was in it for literally half a day. I got in quite early when it came up on one of my scanners, and then I went for it. I only traded what I was okay to lose, so I didn't put loads of money in. I just put something in just to test the waters and see what this stock was about. But I guess first of all I need to start off by explaining what the stock HCMC is. But before we start, can I just get you to click the thumbs up button or the subscribe button, or even both? I really would appreciate it, and it will just let you know the next time I release a video. I tend to trade hot stocks, so I will be trying to put content out based on hot stocks, so you don't have to do the research, because hopefully I can do it for you. So HCMC is Healthier Choice Management Corporation. Yeah, it's a bit of a random one. It's not one that I would say put your life savings into unless you are okay to take the risk of potentially losing everything. But what they do, or what they state on their website, which is providing healthier alternative options for lifestyle. So that broad and generic wide description covers them for their vapor, smoking, e-cigarette side, which does quite well for them. And they have several patents in this industry for new technology for their e-cigarettes. Alongside of that, they have about 9 stores. They are based in America. They have about 9 stores selling e-vapor products that go alongside their patented e-cig items. Alongside of this, they have a supermarket, 18,000 square foot supermarket that sells vegetables, supplements, vitamins, organic fruit and veg. So it's a bit like a Whole Foods, but not as large as in a Whole Foods market. So they have 2 sides of their company, and they're supposedly meant to work quite nicely together. Anyway, recently, looking back on their website, which I have to I have to highlight that it looks like this. It looks very, very basic. It's very old. It's circa 1918. I'm joking. It looks like a website that was built on WordPress back in 2005, 2010. It looks like a website that was built back in 2012, you know, when we also had sliders and, you know, it's very basic, and they haven't even created an SSL on their website. So, you know, you can kind of already know that this isn't one of your Apple or your safer plays. And this is reflected in the price. So a bit of history from the current, 2020 of this company. I can see, having looked back on their SEC filings, I can see they raised some capital to launch or start creating PPE equipment, specifically targeting smaller companies like restaurants or service providers that supposedly don't need to buy 10,000 pairs of gloves. They're trying to be that middle ground number, so not going crazy wholesale, but middle ground wholesale. So they raised some funding or debt for that, and they are going down that PPE route. And as of today, this is pretty much breaking news, and today's the 8th of February 2021, and they have also decided to issue some more shares of the grand total of 5 million extra shares, because obviously since Friday just gone, their share price has skyrocketed more than they've ever seen before. So they're going to make hay whilst the sun is shining. They're issuing an extra 5 million shares. This is basically what's called a stock dilution. And with a stock dilution, it means that they're just basically selling more shares. So if you are a shareholder of this company, the value of your share is ultimately less. So this can be looked at in 2 different ways. Some investors obviously are going to be disgruntled by the fact that their value of what they had before is now smaller. So if you are a long-term investor in this stock, then you now own less because they've decided to issue more shares. However, the advantage of companies doing this issuing of shares is that they get access to more money, more funding, because they're selling more shares. So you kind of hope that they're putting that money to good use and not just for the board of directors to buy themselves a new home, but you hope that they're going to be creating a new product or launching a new market strategy or doing something with the funding that they're going to raise. So you hope that it's an investment now that's going to pay off later on when they turn around the company. Whilst doing my research on this company, it's also noted that this company has filed a lawsuit against Philip Morris, and they are one of the largest cigarette and tobacco companies. They make products like Marlboro. I can't say that. I'm not a smoker, but that, you know, I'm going to put the packet here. That popular brand of cigarettes that was one of the biggest brands back in the day when smoking was once cool. They make these products. So this company's money is long. They've been around for many years. Philip Morris, it's a company that I would say might be worthwhile if you're okay and feel comfortable in your heart to invest in for a dividend type of stock. But they're basically suing this giant of a company, hoping for a big payday from copyright infringement. So HCMC, Healthier Choices Management, they've created this new type of device for vaping, whereby it's got special patents and special qualities that makes it different to others. And they've registered this, they've patented the technology that they've said that they've spent money on investing in. And from researching Philip Morris and hearing the CEO talk, they are trying to get people to move over fully into the vaping world and move people over from fully combustible cigarettes to e-cigarettes. And they've apparently invested $3 billion into their smokeless products. But then HCMC are claiming that, oh no, you've just stolen our technology. We've had this first, we want our money. And with patent law, there is a lot of money and good payout that can come of this. So with that said, this sort of has gone around. I mean, this was only, the lawsuit was submitted the 30th of December. And over the past few weeks, we're now in February, but in January, I was hearing murmurings of this particular lawsuit. So it's gone around, it's bubbled under, and it's finally coming out. And we have a date set for when this lawsuit is going to court. So everyone is now jumping on this bandwagon to go to the moon. And to be fair, I would say we're at least leaving Earth's atmosphere with the current share price. Today has seen massive growth for stock HCMC, with it literally on Friday closing at 0.019. And today it reached a high of 0.047. 0.047, that's immense growth in one day. So all these stocks and memes are out there, everyone's jumping on this bandwagon, and the question is, should you put your hard-earned cash into HCMC? Well, we can go down a bit further into what's going on. So the company itself is listed on the over-the-counter markets, the OTC, over-the-counter market. And unlike the New York Stock Exchange, NYSE, or the NASDAQ, this is a bit of a controversial market. It's where all the penny stocks hang out. Yeah, so you'll find stocks that are under $1 here, and this one is definitely under $1. So it's located here. Because all the different markets have their rules and regulations that you have to comply to be able to list on there. And obviously, if you list on the NASDAQ or the New York Stock Exchange, there are certain requirements and certain quality and boundaries of the companies that will be on there. So you know and expect that the companies will hopefully be following the correct rules. So at least as an investor, you feel, okay, your money is a bit in a safe place. But with OTC, I don't feel that you have that sort of right. There's less requirements to list on the OTC, and one of them is the information that you must give out. You don't have to submit as much detailed information about the company, which can be a good thing, because obviously when these companies have to say everything that's going on within them, it really does affect the share price. It does affect the company. It's not always good. But in terms of an investor, if you're going to invest so much money into it, you kind of need to know what is going on behind the company. So that's one thing to note about these over-the-counter markets. And with that, obviously, there are risks that are involved with trading with these particular stocks. And the risk is obviously lack of reliable information. And I mean, even when looking at the website here, you can see that they've not even got an SSL certificate installed on their website. And I'm sure today, with the stock going parabolic, they've had so many hits onto their website, they could at least have that and have it updated. But you're not going to get that with this kind of stock. And it's just something to note. Hopefully now, because there's been a lot more attention on this particular ticker, they might start looking into more things, and obviously they've issued more shares out. They will be on the news today because they've had such tremendous growth in their share price, so there is a bit of a spotlight on them, and they're going to use that in order to obviously sell more products, because myself and whoever's watching this video now, you're going to know a lot more about this company than you've ever done. You might even decide, oh, as you're driving past it, if you're in Florida, you might pass one of their Ada's shops and pop in there because you're more familiar. So that's something to note. Another thing to be careful of with trading on OTC markets is the spread. So the spread is when you see the buy price and the sell price, the difference between the two. With the OTC markets, there tends to be a generally wider spread. So for instance, you buy a stock on the OTC market for 0.05 cents. You buy it, or let's say 10 cents, you buy it for 0.010 cents. And then to sell it, you would have to sell it at for instance, at 0.05 cents. So already you are 0.05 cents down if you just wanted to leave the trade. Whereas other stocks have a narrower range whereby it might be a cent difference between the two. So it's something to be very careful of. When you are going into these trades, you are automatically going to be down as soon as you enter it, because the spreads are generally wider. So you have to make sure you know what you're doing and why you're going into it, and have your ideal entry and your ideal exit, and then follow your plan. If you're trading on something like Trading 212, which is a broker here in the UK, I've noted that and a lot of people on Twitter, and one of my friends sent to me that I can't buy into this. They've actually paused trading on this particular stock, and I'm not entirely sure why. They've not given us any reason just yet, but again, it's something to be wary of when using certain brokers, that they can just switch them off. And I feel that it might be particularly because this might be the next hype stock that people are pumping and possibly dumping. So you've got to be wary of that and think about that before going into this particular stock. So overall, if you are thinking about trading this, make sure you are okay with the amount that you could potentially use. When I traded this stock last week, I noticed that it was very slow to execute. So when I went to buy the stock, first thing, there is a minimum of 50,000 shares that you can buy, which works out to be about £50 or $70. It took a while before the broker executed my trade. And I don't really, when the stock went up and I was quite happy for this type of return, I was following my trade plan, I tried to sell. Unlike Apple, I always mention Apple, but unlike the popular stocks that there are on the New York Stock Exchange or the NASDAQ, those types of trades tend to execute very quickly. This one didn't. I was sat there in the sell for a while. I would say it took about an hour and a half for it to execute. Or maybe it was about an hour for it to execute my trade. So it's very important you are aware of this before going in, because you may not be able to execute and sell out as fast as you're used to. This might vary from broker to broker, But I'm guessing for the typical retail trader, if you are using things like Trading 212, Robinhood or things like that, it might be a lot slower to execute. So be aware of this when you're going in on that particular stock. And again, do not trade YOLO. It's not a good idea. You might win, but you may also lose. And that losing can be awful if it's a lot of money and you can't afford it. Okay, some more information about the company in general. Overall, looking at their financial statements, which are obviously always questionable because you can put whatever within reason down. You can have creative accountants. But they said that in 2019, last year, they had overall more sales of their vape stuff because obviously the shops were open, people were going to the shops. Whereas this year they've had less sales. But overall their loss is less in 2020 than it was in 2019. I can see they have cut their costs down a bit, and overall their grocery side does them quite a good service for them. They do sell a lot through their grocery stores, and but overall the company is making a loss. That's the other thing to note. The company is making a loss year on year. They're not making a profit, so be careful. So last week I did play this particular trade. I got it on the 2nd of February. I'm just looking at my history. I got in at a 0.014 share price, and I sold 2 days later at 0.018. So a 0.04 cent move. But obviously we're talking about like thousands of shares. So that little move was very good, and this is how this particular stock can change people's lives if they're okay to risk the money that they put into it. From my research, I can see that it is typically a pump and dump stock. It's come up on Wall Street Bets, this particular thing. Philip Morris to Sue is a big catalyst and has made all eyes look at this particular stock. People on social media, again, we've seen the power of social media and how that has transformed stocks and has encourage the retail trader to get in on particular shares. I'm also now in several WhatsApp and Telegram groups on trading. This has been the most discords and different groups, and people are talking about these particular stocks. And with that said, everyone's jumping in. And when people are sharing on their Twitter how much return that they've got back, it's creating more hype, it's creating more attention for the stock, it's creating more interest, and people are trying to get in on it as well. So I would say today it has made a bit of a top. I had a bit of FOMO, I'm not gonna lie. I did go back into this particular stock, and I sold out again because I was not gonna hold. I'm a bit more of a risk averse trader. I know scared money doesn't make money, but I still believe in sticking to my rules, and my rules which I've learned from losing money. Still got to stick to those. So I try not to keep something like this, especially if I put a lot of money in it overnight, because you just don't know what's going to happen. And with the shadiness of the company, I just don't know what's going to happen. It reached a high of 0.048 shares, and then now it kind of dropped off a cliff, down a cliff, and it seems to be having a base of 0.030 shares, which I think is a fair price for it to be, because the way it went parabolic, it needed to cool off a bit, and that's what's happened here. So I think, again, with social media pumping, Reddit pumping, and obviously this upcoming lawsuit that everyone's eyes are on and hoping for a great payout. Thing is, I don't understand why people are thinking this payout's going to be great for them, because this company doesn't pay dividends anyway. So the company is going to keep the money, and they've obviously issued more shares now, so they're just going to be sat on a bit of a gold mine, and hopefully they're going to do something with it to improve the company, maybe increase the number of stores that they have, and they're going to be jumping on this for now, especially if it continues to make amazing moves like it did today, and people on social media keep tweeting this and keep Instagramming and making stories for this particular stocks and their winnings. But one thing to note, I wouldn't stay in this stock too long trying to get a hole in one. Just take your profit, because literally today the stock was up by 100% or 400% or something like this, and then it came crashing down at a drop of a hat, and no one knew when it was going to happen. So those people that didn't take their profit, they may now be in loss now, depending on when they got into it. or at least, you know, they might be in a little bit of profit. So it's something to be aware of. Always capture your profit. But this also might be another example of buy the rumor, sell the news, a bit like an earnings play. When we have earnings coming out, the stock typically runs up, and then when the earnings come out, it goes down. So it might be another example of that. Buy now, sell when they have their court case judgment ruling, because it could go either way. We don't know what's going to happen. We're assuming they're going to win and it's going to go to the moon, but we don't know. So again, you might buy now, sell half when you've got a reasonable amount, then wait for the rest when the information comes out. At least that way you have not put everything all on the line. You've captured some profit and you should be happy with it. So in short, this is a short play. Bit like GameStop, bit like AMC. Those stocks run up, and those people that made money during the initial run up, very smart. You have to get in early, capture your profit, and then get out. Don't get greedy. When it runs up like this, like it's run up today, don't get in. Wait for the pullback. There is always a pullback. It's like a bus, you know, they always come round. You just have to wait for it. You have to wait for the pullback. Otherwise, you're going to be buying at expensive, extremely high rates, and it's more likely that it's going to go down. And we've all seen that meme. As soon as you click buy, it drops out of the air. This happens. Don't let it happen to you. Wait for the pullback first and buy in at that point. This is not a stock to sleep on forever. You are not marrying the stock. You are just dating the stock temporarily. So you get in and you get out. You get in, you get out. Do not stay in this trade for longer than necessary, because you're gonna get your fingers burnt. This company can't even be bothered to put an SSL certificate on their website. It's not a good sign. I don't even think they dated their. And if you want to get into cigarettes and that type of things, check out Philip Morris, the guys that they're suing. Their money is long anyway. They can afford to pay these dudes. So check them out. See a good price to get in, and think about getting in with that if you want to get or have access to this sort of consumer market. Because I think it's a good one. It's something that, again, that people will buy. If you smoke, and you're gonna keep going back to buy more, aren't you? Regardless, it's that nicotine. So yeah, that's it. That's all I have to say about this particular stock. It's reached a high of 0.047 or a bit higher. Get in below that. It's now trending down. Hopefully, you know, we'll have another run tomorrow or later on in the evening. So yeah, thank you so much for watching, guys. My name is Mary from Business Trading and Money. I'll see you at the very next video. Bye bye.